All right, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So, again, kind of like last week, we talked about the market's ability to hold up and kind of remain buoyant going into options X week, and that's basically been the case here. If we take a look on the, we've basically been flat since last Thursday. We closed at 413.47, and then really just kind of a mini roller coaster, but mostly a flattish week here. If we look at the weekly time frame, it's slightly negative here. We are still trending up just a little bit there on the spiders. We also said to watch for a little bit of risk potentially coming into the latter part of the week, and we did see a decent sell Wednesday, Thursday, but nothing crazy, right? The market still held the line, and we still held this kind of a downsloping trend line, which we got above 2 weeks ago, and we're just kind of hovering in this area right now. But we also said to watch for some problems, and especially post OPEX, I think we need to start to get a little bit more careful here, specifically really in the NASDAQ. And one of the things we've talked about here is the semiconductors, right? So lower highs here on the semis. We made a high on the 31st, and we've really just kind of come in ever since then. Now, it's not the worst pullback here, but you're seeing it unable to kind of hold up with the triple Qs and make higher highs with the spiders. So that is a major problem moving forward. Additionally, if we look back over here on the Qs again, and we just throw on a advanced decline here for the NASDAQ, you can see when we bottomed in mid-March, the AD has bottomed as well, but it also has not really. I mean, you had this one little push here towards the end of the month, and it's been flat. So lots of weakness here, and it's really just crappy breadth. And overall, that tells us the market's kind of running on fumes. If we look at earnings here, IBM originally had a nice gap up to 130, but couldn't hold the gains. That's not a good sign. When you gap up on earnings and then you fade that and then close lower the next day, that indicates distribution, and then big money is using that strength to get out. Tesla was down 10% after earnings, although it did hold the line on Friday, but still a pretty, that's some definitely decent chart damage there for Tesla, getting back below that 100 moving average on the daily. Netflix also had a negative reaction here, although nothing terrible. It was able to pare some of the losses by Friday, but either way, these are just not really good. It's not a good way to start off earnings season, especially with the AD line as low as it is. And markets right now just seem to be kind of running on fumes, right? We've talked about this a little bit. Spiders have made higher highs, but they're starting to look a little tired here. You're coming into a resistance zone. The triple Qs especially, obviously, we've been talking about big tech in this video here, but you have this gap above, and we've had a nice push up and a decent consolidation pattern, but I feel like the clock is starting to tick a little bit here on this pattern. There should be, and I said this same kind of thing back in February. We had this big move up, we had a pullback, and I said, look, the bulls should be able to break this out right now. And then the same thing in November to December, we had this move up and a consolidation pattern. I said, this is taking too long for the bulls to break out. We're probably going to break down, and we did both of those times. And now it's starting to feel like that. Again, if we look on the weekly, again, you do have a nice, bullish inside bar there. There's no problems with it, but you're going up against one red candle here, and this should have enough gas to get through that, theoretically. But right now, it's just struggling to really get back above that 320 area. Every time you get to the 320 line, it gets rejected pretty quickly. We had that one close above it, then right here a gap down and a close flat to it, and then a gap up and a reversal, a test intraday there, a gap up, and then a reversal. So, Q's looking like they're running on fumes, and I think that's going to be a problem for the market. Again, we mentioned the semiconductors here. If we can get, one more pop in this market, I'm not seeing a ton of upside in the Qs. Again, we could see it to that gap fill. Obviously, that's barely a move there. If you get through that, 329 is really your max upside. I think for this leg, for the spiders, again, I would love for a move up to that 420 area to fill that gap potentially. But even the spiders looking a little bit on the tired side, all things considered. They've had a nice move here off the lows. We'll see what type of move we get here over the next week or so with earnings. We still have the rest of big tech, Google, Meta, Amazon, I believe Tuesday or Wednesday. Then I think the week after it's Apple and of course FOMC. So markets may be able to hold up until then. Even if earnings are poor, they might float this up just because the FOMC is right around the corner. So sometimes you can kind of get investors to stay on the sidelines there and not move money or sell money, sell stock before that, as to kind of wait for that FOMC statement. But either way, markets are looking a little bit here on the tired side to me. As I've said, and we've talked about this, again, ad nauseum, the semiconductors are a huge leading indicator. The Dow transports, right? So, high, we had that big blow off high. I said this was a blow off top in February, and that's been the case so far. And now you're coming down here and you're putting in a bear wedge on the weekly time frame. So that's not a good look here for the transports. If they can pop up a little bit, again, they can still get to 14,750, but this is still a bad signal here that the transports are not making new highs with the S&P and with the Dow. I mean, the Dow, it's gotten above that March 6th high versus the transports, which are, still, well, I suppose there's, they're above these little pivots here, but it's still a bear wedge. And then there's your March 6th pivot. And then, of course, your big blow off pivot, which we're way below on those. And then if we go over to the Russell 2000, again, weekly pattern. This is just a bear wedge. Monthly pattern, an even bigger bear wedge, right? So not a good look here to see small caps, transports, and semiconductors lagging the markets. So right now, as long as the volume remains light, which it has been, even with that little pop there, it's normally a little pop in volume on OPEX Friday. But even with that little pop in volume, we still only had 73 million shares, and our 50-day moving average here is right around 90 million. So well below average volume. They can hold this market up. Again, like I said, if we get one more pop in the S&P, this is probably where you're going to go. I don't really see much more upside past that. And then we have, earnings, obviously, and FOMC. But right now we are into the risk period. I've got that, calculated out cyclically, and we're kind of getting into that zone, which should last for a few weeks. So we'll see, if bears can do something here. Right now, again, as long as the market volume remains light, we're going to give the market a neutral to upside bias. But any time you get a high volume reversal, any type of big engulfing candle like that, like the one we had in, obviously August, or, even some of these in June, or in the past year, or even just a big outside move on high volume, it's probably indicating that we have a market top in place. But for now, again, they can hold this up probably, I would say, at least another week until FOMC, and we'll see how it trades into that. But I think we're starting to see signs of this rally running on fumes here. So anyways, let's get over here. So we mentioned everything here, but let's get over to the Qs again. So the levels, just to reiterate, again, we'll look for this gap fill. Maybe they can get through that. If you do break down and you lose, this 312, 310 area, that's going to be a big negative for the Qs, and you're probably going to have to go down and test 300. You might get some support at that 50 moving average, but that 300 handle will be a big important level to be tested there on the spiders. It's really kind of this 404, 405 area, or a daily close below, 408. So that green bar there, you get a daily close below that, would also violate that daily 20 moving average as well. So that could be a big level to watch. That would probably take you down into that 400 handle if we were to break lower. And that would also be, for what it's worth, that would be a failed breakout of this upsloping trend line. So some levels to watch there. It's not dead just yet, but these are levels that I'm watching in the next couple of weeks. The Dow here via the DIA, you do have a bullish inside bar that's still hanging in there. That can still get up to 343 if this has got really no problems. But that's it. That's really all the upside in the Dow right now. And again, the Dow is leading. We've kind of mentioned this, right? So outside of just the breadth being terrible, the Qs are lagging, the Russell is lagging, and the Dow and the S&P are leading. That's not bullish. That's definitely not a sign of risk on. But for right now, the Dow is holding up, and that's the level I've got worked out for it. The Russell, maybe you could work your way up into the 181, 182 area, but that's really, you've got a gap up there. But again, big picture, that's a weekly bear wedge and a bigger monthly bear pattern there as well. All right, so we mentioned the transports already, but 14.75 is kind of your upside here. Back below 14,139 is a big negative. and that probably takes you back down to double bottom pretty quickly. The semiconductors here, I do think they defend this little trend line here one more time, but I don't see a lot of upside. I think you get another lower high, and eventually this trend line will break, and that opens up the door for 240. And if 240 goes, it's down to 230. You got a lot of pivots right here around 228, 230. And then this can go a lot lower after that. But for right now, it's hanging in there okay. If you do get a pop up, maybe 260, a slight pierce of 260 is what I'd have in the cards there for the SMH. And by the way, before I forget, look at TSM. I believe we mentioned this last week, but Warren Buffett sold all of his TSM. And he invests all over the world, in China as well. So he knows, he's not a dummy. And that's an outside move there for TSM. You lose this pivot here at 84.42. TSM is in big trouble here, and I think that's telling us a lot about what's going on geopolitically here. But Taiwan Semi, not a good look there. Anyways, IGV here. This has been one of the stronger charts here, mostly thanks to Oracle. Oracle's just been a powerhouse lately, but IGV holding up reasonably well. And if the market gets a little bit more of a bid, this can still hold up to about 310. That's really all I see for it at the moment. That's probably max upside, honestly, altogether. But this chart is one of the better ones out there in the market, and cloud is holding up. Oracle is almost kind of like the Nvidia of cloud software, right? So it's it's been this powerhouse stock. It's been the only one really getting not the only one, but the biggest one getting the real bid here in that respective sector. But IGV holding up reasonably well, so we'll respect that. Moving forward here, onto bonds. So interest rates here, the 2-year yield. Let's look at the yield. The 2-year yield did pop back up pretty nicely over the last, really 2 weeks here. If that starts to clear this 430 area, it's definitely going to put pressure on the Fed. Right now, the Fed is, they're about almost 85 basis points ahead of the curve. So they're not in hot water just yet. But if this really starts to ramp up, that's going to be a huge problem for the market. Right now, what's the biggest problem for the Fed is the inverted yield curve. But again, watch that 2-year yield. If that starts to get back above that Fed funds rate, there's going to be some serious problems down the road. But right now, bonds are holding up, and we'll leave it at that. ZN, you see the 10-year there. That's hanging in there. Okay, here's the 10-year yield. Again, that did perk back up a little bit this week. I don't see this getting too much lower than 3%, though. So just be aware of that. Same thing with the 30-year, looking about 3.2, somewhere in that area. But yields are, they've been a little bit muted lately with things kind of calming down. And the Fed does seem to have a little bit more control right now over those yields. But if they start to push back up, which I think eventually they do, that will be problematic for the market. Anyways, let's get over to housing, XHB. The home builders, just what a powerhouse in an interest rate environment where we have 5% rates in front of a recession, no less. And take a look at the ITB, just blowing up to new 52-week highs. That is a possible topping candle there, though. Shooting star with a good uptick in volume. I would prefer a little bit more volume. If we had volume like that, I would feel very confident saying there's a top in home builders. There still could be one. And again, this is going into a wall of resistance up here. This is a failed breakout, or I should say a failed consolidation pattern. And basically that's where we've gotten back into. So ITB, it's holding up well. It's just had a nice run. I think a lot of it is short squeezing. I know that the inventory numbers are good for home builders right now, but eventually I think is probably the most overvalued sector in the whole market at this point, given, the interest rate environment and given where we are in terms of, economically, we're heading to a recession. The Fed thinks it's going to be a mild recession, so you can bet that it's going to be worse than mild. But in any case, home builders holding up really well. We'll see if that topping candle holds up. XHB, there's still a lot of resistance at 70. I can't rule out if this consolidates. I can't rule out another push up to 72, but I don't really see that much more upside here. Again, the market in general is looking very exhausted to me, and especially in tech. And if one sector goes down, it's all connected. They're all generally going to go down here. But home builders just been stubbornly strong. VNQ here, general real estate, that's holding up okay. This is a decent bullish pattern here, but you're below the moving averages, which I don't like. I think this is weak, and this is susceptible to rolling over, so I would avoid this one. Over to Fins. So Fins have held up much better. We did have better, kind of bank earnings Even Morgan Stanley, that gapped down pretty nicely. I think Goldman gapped down on earnings on Tuesday, but that recovered and got back above 340. So that's holding up okay. But the XLF here, you're still going to have a lot of resistance in 33.75 to 34. Nice pop off the lows, so it's hanging in there okay. And again, JP Morgan holding the gains is a big positive for the market. There's still a ton of resistance up here, so I don't see a ton of upside for JPM, but the XLF is hanging in there okay, so we'll give it the upside bias for now. What's not hanging in there okay is the KRE. This is still very soft. It's just a weekly bear pattern. I mean, there's really no other way around it. Now, you do have a lot of, if we go to the monthly, there's still a lot of chart support here. So this, like I've been saying, I think it's bottomed in the near term. I don't see a lot of downside, but there's not a lot of upside either. And I think this is just going to consolidate until this 20 moving average catches up, and then you're probably going to go retest these lows. So these things take time, but again, not a healthy chart pattern here. And this is the KBE, same thing, same pattern there. So the big banks are holding up for the most part, but these regionals and these smaller, bigger banks, I should say, the medium-sized banks are not holding up, and that's obviously not a sign that things are okay. But they can take some time to play out. So just be aware of that. Broker dealers here, again, kind of choppy, had a nice recovery off the lows. Still some resistance at 470. And you do have kind of a weekly bear consolidation pattern with that weekly 20 MA holding as resistance. So that is still under pressure here. I don't think it has really enough to get through that. But broker dealers have been resilient, so you never know there. But anyways, let's get over to energy here and shift gears. So crude backing off a little bit here. And it did find some support at this 100 MA. You also have the 50 MA just below that, as well as the gap fill. I've been talking about this. It would just be very unusual for the bottom to be in crude without that gap getting filled. So we'll see if they can do that this week. Right now in the near term, I'm kind of neutral. So a lot of the time when you have a big, gigantic gap like that, what'll happen is everybody's looking at it. So shorts want to short and push it into that gap so that they can make an easy buck. Longs want that gap to fill so they can buy the dip. So it's kind of, there's incentive on both sides for that gap to be filled, but there's also incentive for front runners. So essentially, when you have too many people looking at a level, sometimes it'll get really close and then they'll take it back up. That doesn't mean it won't fill eventually. But in the near term, I could see a fake out here, possibly back up to this 200 moving average, maybe even up into the 85 area. Definitely can't rule it out. We also had OPEX week this week, so maybe some of this was just related to, too many people bought calls back here and they want to push it back down. I can't rule that out either. But right now, near term, I'm kind of neutral until I see more of a pattern here in crude. If this does push, this should get back to 70. So that would be your major area of support there on crude, and that's just an easy area to figure out here. So your pivot low, and when you tried to break down, you came up, you consolidated, then you had your breakout bar. That's going to be support if it does come down there. So we'll watch that level, but right now, near term, I have no really good read on it. I need to see at least another week here before I can make any sort of prediction there. XLE hanging in there okay, holding the 20-day moving average. It's still struggling with that 100-day, but it's holding up okay. And if this firms up a little bit more, this can get to that 89.50 to 90 handle there. On the daily time frame, XOP did close below all four moving averages, so XOP a little bit weaker here on the weekly time frame. And if we look at clean up this gap here and clean these lines up a little bit. We don't really need these ones anymore. But you can see this trend line here held as resistance, as well as that 20 moving average. So that's in a little bit tougher shape. Nothing to say you can't put in a higher low and push higher. But for right now, that did back off of that trend line. So we'll watch that moving forward. And the OIH still very, very, very choppy here. But big thing here to me is that you did close back below 280 on a weekly close. So that does indicate a little short-term weakness. This needs to do more to firm up here. But OIH hanging in there okay. It's just very choppy pattern, hard to get much of a read on it. All right, over to Natty. So Nat Gas had a nice little pop here this week, and it came off the highs and then held that 20 moving average. I still like this very much. On the weekly, you have a big move down, a pop, and then a double bottom. So Natty holding up okay, and it's trying to consolidate this little pop that it had last Friday into Monday. And if it can consolidate here, it can work its way through that 250 area, and then probably do about 260 to 270, and then you can get up to 3, where you'll have your bigger resistance level with that gap. If you consolidate through that, it's up to 350. So nat gas possibly putting in a bottom here. Again, we've talked about this ad nauseum. The cyclical patterns here are in place, and we'll see if nat gas can get going. But nice little pop there off the lows for Natty. We'll continue to watch that into next week. Over to uranium, CCJ hanging in there okay. The area that I'm concerned with in uranium is URNM. So we talked about this trend line here, and it pushed through that. Now you have I would say a bearish pattern here on the weekly. So if this pushes lower, this is probably going to want to go test 25. Maybe 24.75. You got this pivot high, pivot low, right in that area. That's probably where it's going to want to go. But for right now, until you get back above that area, and above that 20-week moving average, this is a bear pattern here. So a little bit on the cautious side here with uranium stocks. They may need to do some more backing and filling here on the bigger time frames. As to ag, if we ship back over DBC, that did close back below the 20-week, but no problems here, right? So, just a little bit of a backing and filling. This could be OPEX related for certain. This area here does get me interested. So 2350, there's your former pivot lows, right? All those pivots. Then we had this trend line. Notice how those are kind of meeting in the same area here. So if you get back there, that could be a potential, swing level. I'd be watching that. But, you came back and filled this gap. There's no guarantee it even gets there. And I like that you had a fake breakdown. Usually when you get a fake breakdown, you get a bull move off of that. So DBC holding up reasonably well. MOS a little bit on the weaker side here. Again, kind of looks a little bit more like uranium with that down move and kind of a bear wedge there. So if that pushes down, that should get to 37.50. That's the work I just did on that. And then NTR, a little bit sloppier of a pattern. This has a lot of support around 65 though. But a little bit of backing and filling there in some of the potash names, but DBC looks a lot better to me on a pullback basis. All right, so let's get over to the DXY dollar index holding up okay. We had an up move. I talked about double bottom. We had a nice pop off that, and then we just went sideways all week. If this pattern here got above the 20 moving average and was doing this, I would say it's probably a lot more likely the low is in the dollar and it's going to move up. But right now you're below that 20 moving average. So this does open the door for, I think, and I've talked about this a lot, I would like a pierce of this double bottom down to about 100. That's where I think it's got a lot better support. So we'll see if that can get there this week. If not, and it gets above the 20, maybe it's telling us it wants to put in a low or it has put in a low already. But I think the much better level there on the dollar is right around that 100 handle, maybe a slight pierce of that. And then for gold, you can see obviously coming in as well with the dollar getting a bid this week. Gold here, look at what they did. So I was telling my viewers this week, watch 1994, right? So that's this green bar low here on gold contract futures. And on Friday afternoon, this was hovering at like 1993.50, 1993.60. Look where they closed it at 1994.10. So they held that by 10 cents. So that technically you still are above that breakout bar on a weekly close. So that's a sign of strength there for gold. Maybe it's telling us the dollar wants to have one more dip there. And gold to have a little bit more strength here. I still think PMs are still a little pretty overbought here on the bigger time frames, but they're hanging in there well. And we'll give them the upside bias for now. Specifically silver. Just look at this move. 30% move in like 5-6 weeks, not even. Coming off the highs here, he found support at 24.75, $25. We'll see what this does here. Obviously, if the dollar backs off, that would be a tailwind. If the dollar finds some strength, this probably wants to go down to 24 and test that old trend line. So that blue trend line there. But we'll watch that moving forward. Platinum was really the one that was on fire. This one I think was playing catch up. And we talked about 1040, 1045. Blew through that. 1060, 1-2 consolidation. Bang. Big move there on PL. It is overbought, but that's what commodities can do. And especially things that are, platinum's a thinner market. So it doesn't take much money to move this. I think this probably at this point wants to go test 1200, maybe a slight pierce of that. I don't know if it's going to get there in a straight line, but Platinum can do that. It may need to consolidate a little bit, but that's where I think it wants to go test, because it blew through that double top very easily. And when you see that, that's a sign of strength. The fact that it didn't have to pull back at all, that's telling you it's strong. So it's probably going to have to go up and test this red bar high right up there in that 1200 area. So Platinum showing lots of strength. It is overbought, yes, but again, it's a thin market. They can push this up pretty quickly, especially if the dollar, if the dollar rolls over to that 100 handle, that's going to be another tailwind. So Platinum, I've been on the Platinum train for a while, saying that this is a buy ever since late summer last year, and that's been a powerhouse move, really ever since then. So nice move there for PL. Copper here. I'm watching this little trend line. It did break that this week. It's kind of more on the minor side, but I'm not really sure what it wants to do here. It's been sideways for really the whole year, pretty much ever since this kind of surge there. It's been kind of sideways. I still think it needs to go test 375, but it needs to take this pivot out, I think, first and confirm kind of a lower, a lower low on the daily time frame before we can get that. Because I thought it was going to do that back here, and I thought it was going to do that back here, and it just stubbornly tried to push back up into that 420 handle, and it's just been kind of chopping around. But if you take that low pivot out, that probably opens the door up for another move into that 200 moving average there. So that copper breaking that trend line, so that's really the first step there. But anyways, let's get over to Bitcoin here. So Bitcoin finally got something interesting to say here. We did have a nice pop, but we may have a turn here, may have a top in place. So we came up, we had these nice patterns. We had this big run, bull flag, a little pull back into the 200, up move, bull flag, up move, bull flag with a failure, right? So this one failed. Usually when you see that, it's probably about to, now it doesn't, I can't rule out right now. If we look on the weekly, I mean, you do have an engulfing reversal there, so I guess that's probably a top. There could be, I guess there could be one more pop here. I would have to see probably the monthly close. Right now, really what we're looking at is this monthly here. That monthly 20 moving average and this red bar high here at 32,000. If you can't recover here by the end of the month, we got 1 week left, then it's probably topped. If this kind of gets a bid this week and can kind of put in a flat close or even a green close, it can have one more pop up into that area, but clock's ticking here. So, outside of that, it's an engulfing reversal and possibly a failed breakout and a failed bull pattern. So I would say chances more and more by the day are increasing that this is a top and Bitcoin's going lower. First step would be 24 to 25. So simple area here. Figure that out. So there's your previous pivot high to pivot high, right? And then maybe a Pierce could take you to 24 where you got these pivots, right? So you get an overshoot, right? So there's always that chance, but that's where your big support is now. If it holds that 50 MA and you get a bid off that, there will be resistance a lot at 30,000. But if you get through that, you can test that area one more time. I'm not convinced that it's going to happen. I think you would have needed to see a much more fierce buy already. Like this 50 moving average should have given you a big bid off of that. But if you get a bear pattern here and you start to go sideways, this is going to go down to 25. And I think top is in on Bitcoin. That could be a leading indicator. I've been telling my members all week and my subscribers all week that could be a leading indicator here for the spiders. Right. So, over the last couple of years, really, there's been periods where Bitcoin has been a leading indicator for equities, either up or down. In fact, I'll just use my Thinkorswim Bitcoin, but in March we had a big surge in Bitcoin, right? And the spiders kind of followed through. They didn't follow through immediately, right? We had that sell off on the 22nd, but Bitcoin, like, that was really holding up the whole time. And that was kind of a leading indicator there. And now maybe Bitcoin's telling us that this rally is basically what I've been saying this entire video. This rally is on its last legs. Could we get one more, exhaustion pop? That would be my preferred scenario for this market to actually put in a sustained top, because up until now, it's been very, every time we get a sell-off, the bears come out of the woodwork, and then it's just, there's too many puts, there's too many shorts, and then we get a short squeeze. I think personally, for me, preferably, I would like to have one more pop to really push those last shorts out of the market, and then we can get an actual top here. But the market doesn't always do what you want. But in any case, Bitcoin, very interesting there. We'll see how that plays out this week. Obviously, for the markets, specifically NASDAQ, looking very top heavy here. And obviously, we have big tech earnings coming out soon. Apple, Google reports, Microsoft, and Meta. So we'll see how all of those do here in the coming weeks. But either way, I do think this market is kind of putting in an exhaustion move, or maybe it already has, and it's just a matter of time before we roll over. Anyways, guys, gonna wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. Talk to you all next week.